Mayuresh Joshi, though, fund manager at Angel Broking, joining in as well into the conversation. Mayuresh, thanks so much for taking the time out this morning. What's the reading looking like as far as markets are concerned? It's expiry week, it's a truncated week as well. Probably a little bit of calm right now, but then again, do you expect the momentum to come back?
Morning, Priyank. I think clearly 2 to 3 factors, both domestically and on the global scale, that the markets are looking out for. Clearly, I think results have been extremely disappointing. And again, I think nobody really expects earnings recovery to happen in Q3, Q4. So the better part of FY16 is rather a washout here, probably in terms of how earnings will pan out. It's the expectations of the first half of FY17 that is probably getting built in terms of double-digit earnings growth. Secondly, I think what probably happens with the winter session of Parliament is going to be key in terms of key reforms like GST. So I think if any successful implementation in passage of that reform takes place, the markets are going to take that very, very positively. On the global side, I think looking at the kind of data points we've received from Japan, the kind of data points expected from China, which are still expected to be very soft, both in terms of how the PMI will pan out and also in terms of how the services data will pan out, is going to have a big overhang on the markets, as well as what the Fed does in terms of the actual lift-off in terms of rates. So our take is taking in cognizance earnings recovery, taking in the latter part of FY17, the capex and investment cycle also recovering in the latter half of FY17. The market's probably stuck in a range between 7,500 on the lower end of the Nifty to around 8,200, 8,300, the higher end of the band.
All right, Mayuresh, hold that thought. The pre-open quotes coming up on the screen as well. 1 to 2% lower on the Nifty is what we're seeing. ITC, Wipro and HUL getting active. So the defenses are once again somewhat trying to balance the index out here. While you've got cuts coming in on Bosch, ICICI Bank and Hindalco. I believe there's a little bit of a brokerage initiation coming in. As sorry for that. Bosch and ICICI Bank, along with Hindalco and Tata Motors, are a couple of the stocks that are actually somewhat weak. In fact, let's go across to Mithali for some of the top company news this morning.
Priyank, Gammon India is on our radar this morning. Lenders led by ICICI Bank and Canara Bank have decided to initiate a strategic debt restructuring at Gammon India, which will give them a 51% stake in the construction and engineering company. Meanwhile, Jaguar Land Rover issues a profit warning. The automaker expects lower pre-tax profit in 2015 because of major investments and a blast at China's Tianjin port that destroyed thousands of its cars. It also plans to invest £500 million in its British engine manufacturing centre. United Spirits, meanwhile, will be holding its 16th AGM today. The remuneration of the company's CEO Anand Krupali is likely to get ratified, along with the ratification of appointment of 4 directors. And the National Pharmaceutical Pricing Authority has exempted price controls for 3 insulins of Wockhardt, giving the pharma major free hand in deciding the price of those 3 drugs for the next 5 years. Back to you.
All right, Mithali, thanks for getting us those updates. Mayuresh, let's talk about a couple of the stocks that are in news this morning. Tata Motors, again, some bit of warning coming in from the JLR CEO in one of the interactions to a certain agency, talking about the fact that you could miss the full year pre-tax profit number that they'd actually issued earlier. Now, the one of the obvious reasons for that has been the Tianjin port explosion. Your thoughts on this and on Tata Motors itself?
So clearly, I think this issue was discussed when the results did come out. And yes, I think for the better part of FY16, I think a lot of analysts have built in lower estimate, both in terms of how the JLR margins will pan out and both in terms of how the revenue forecast will happen, specifically taking in cognizance how China sales will pan out. So again, I think if you expect really China sales to recover in the latter half of FY17, the other markets have been doing well. That's point number 1. Point number 2, probably ex-China, the new model launches have been well received. And clearly, I think the modular platform strategy that Tata Motors is embarking upon is going to get benefits in the years to come. 3, I think it's not a story that needs to be played out over the next 2 to 3 quarters. I think Tata Motors is a story that needs to be played out over the next 2 to 3 years. The kind of investments that Tata Motors is probably doing, the investment in its British plant, the kind of investments that they've already made in China, and the kind of R&D expenses that they're already doing, I think it's going to be a huge 2 to 3 years for them in terms of how competition is panning out. And yes, I think we remain optimistic on the stock, but clearly I think the risk reward from the current price, seeing what the movement has been a little bit too fast. So again, I think on declines is something that I'll suggest Tata Motors, but again, I think the stock should correct another 7-8% before long-term investors start dipping into the stock.
All right, so that's Tata Motors out there. Marish, the other interesting bit has been from the mid-cap space, UPL and Advanta merger as well. Both those stocks were in focus yesterday. Just pull up as to how they're panning out in the pre-open as well in terms of UPL and Advanta. 0.2% higher as far as UPL is concerned in the pre-open and Advanta as well. Will be another one to watch out for. 1% lower there. Mayuresh, any thoughts on this merger?
So clearly, I think the synergies should pan out over the next few years. And again, I think the kind of geographical advantages that both these companies have was clearly earmarked in the management discussions yesterday. Clearly, I think if you look at the standalone performance that UPL has posted, ex-Europe in the last quarter, which posted a degrowth in terms of sales of 10%. Latin America, US, India, rest of the world has held up pretty well. The volume growth, in fact, was around 13%, and the price increases were to the tune of 2%. Clearly, if you look at the global agrichem industry, Priyank, the kind of off-patent products that are expected to go into the regime for a lot of innovators like or a lot of off-patent guys like UPL, I think the huge advantage benefits should come down to them. So I think $3 to $4 billion expected to go off-patent over the next few years gives a clear distinctive advantage to UPL with the backward integrated facilities that it has probably got. So clearly, I think we're expecting decent numbers to flow in on the standalone basis as well. And again, in terms of the actual merger coming through, I think the earnings growth between 10 to 12% is still expected to come through. And I think the positive synergies should be built in. So again, I think we built in our positive view onto the stock. I think any decline becomes a good opportunity. We still believe that the company on a standalone basis can post an EPS of 38.5 rupees for FY17.
Okay, so that's as far as UPL and Advanta are concerned. Keep an eye on these counters in terms of trade today. What about the IT pack, Mayuresh? Quick comment there as far as how that's panning out, because the last couple of days have been a little quiet for the entire pack. It is the large caps.
So clearly, I think the mid caps have outperformed the large caps in the interim. However, I think the large cap IT names, since the massive correction that we've probably seen, poses a good opportunity for long-term investors. And clearly, I think Q3, Q4 are going to be soft, both in terms of furloughs and Q4 in terms of how the client budgets get decided. However, from an FY17 perspective, our take is with the kind of numbers that these companies have posted, constant currency growth should be quite reasonable. For Infosys, again, clearly, I think the client mining activities they've done have been extremely of a value addition to them. TCS's order book is 30% higher than its all-time order book. HCL Tech, again, engineering services, which contribute 18%. I think that uptick will be seen with higher margins. So again, I think I think the earnings trajectory looks quite sound from an FY17 perspective. Valuations after the corrections seem to be much more reasonable. So again, I think the top tier IT names, HCL Tech, Infosys, TCS, is something that will recommend long-term investors as part of their IT portfolio for a long period of time.
All right, Mayuresh, hold that thought. 10 seconds to go for the markets to kickstart live trading. Let's go across and get you a quick update in terms of how the live trading is actually picked up today. The pre-open was indicating somewhat of a slow start, and that's what we're seeing. Down by nearly 2 to 3% on opening. Wipro, Hero and Bharti trying to support the index and provide some bit of comfort, while Bosch, TRL and Infi again seeing the weaker side of the market is what we're seeing as far as the opening quotes are concerned. And you're now quoting at 7824 as far as the mid-cap index is concerned. Lanco Infra though, up 19% is what we're seeing. Pull up that stock for you quickly as far as some of the mid-caps are concerned and the newsmakers right now. Pfizer also on opening is seeing a little bit of a boost of nearly 6% today. Get all these counters going for you. Gammon India 10% higher is what we're seeing. Parabolic Drugs 19%, good volumes there. Dolphin Offshore 14% on opening is the kind of spurt that we're seeing as far as some of these names are concerned. Viceroy Hotels up 6% is what we're tracking. Indiabulls Real Estate is another one that's in focus from the mid-cap space is what we're tracking as far as a couple of these names are concerned. Mayuresh, Lanco and Gammon India, what's your reading on these two?
So clearly, Priyank, I think do not track these counters, but specifically, I think if you're looking at mid-cap ideations within the infra-stroke EPC play, I think a couple of mid-caps that we probably like at this juncture are MBL Infra and KNR Constructions. Clearly, I think they've got a very decent order book, specifically in the case of KNR Construction. Similarly, for MBL Infrastructure, if you look at their execution track record, the kind of order wins that one really expects, the fixed cost absorption should be much better because of better execution, and the translation of a 15% EBITDA and bottom line growth should be quite evident. Again, I think if you look at the equity contribution that is required for its port projects, I think very minimal in terms of 50 crores out of 278 crores of the mandatory equity requirement. And clearly, even in terms of EPS, I think 26 times is what we got away in MBL Infra. And similarly for KNR Construction, I think the EPS business should hold up pretty well. So I think these couple of stocks should do relatively better over the next few months with the government push specifically on the infrastructure sector, and EPC guys should begin to rule the roost as far as these reform processes on the infra side is concerned.
Okay, so that's as far as some of the infra names are concerned. Just pull up SpiceJet for you once again, because that stock seems to be holding on once again after a decent rally yesterday. Stocks in positive 3.5%. Mayuresh, this has been the hot space in the market when we talk about the aviation pack and the way it's been outperforming. What do you make of it?
So clearly, I think the fall in crude and the fall in ATF prices have had a positive effect in terms of how the margins of these stocks will pan out. Again, I think the important factor to note here, Priyank, is how the load factors probably are panning out. And again, I think Q3, the load factors should hold up pretty well. And looking at the way the Brent prices have corrected, ATF prices should meaningfully add to the contribution for a lot of these companies. Having said that, probably the kind of run-up that we've seen in this stock has been stupendous. So clearly, I think if you look at the profitability matrix out of the three companies that are listed, Interglobe looks the best placed out here, but clearly I think there are issues related to valuations at this juncture. Again, I think in terms of how the balance sheet will pan out for players like a Jet or a SpiceJet, because the leverage issues that they've got, the negative net worth that they probably have on their balance sheets and might linger on for some length of time. To give a structural fundamental call over a longer period of time is a little bit difficult, but clearly I think over the next 2 quarters these companies still will be making in or raking in good cash flows, again purely based on the fall in ETF prices and load factors going up.
All right, now Bosch is the one that's actually losing. There's been a brokerage coverage that's initiated on this counter with an underperform rating, 3% lower as far as Bosch is concerned, is what we've been tracking. Mayuresh, any thoughts on Bosch?
So clearly, I think valuations always played headwinds to Bosch, and around 40 times earnings, forward earnings. I think clearly it's looking expensive. It always looked expensive, but clearly I think the entry barriers are quite high. I think the premiumization in that respect should sustain. I think there have been issues related to how the mechanical shifting is probably happening, and with the Bosch is probably geared up to that. But again, I think they have been doing the right investments, and again, I think that meaningful returns have been showing in the stock price. The return ratios have been quite good for the company as well. But clearly, I think at this juncture, when you're talking about what probably is happening on the global scale, Volkswagen in general, that overhang on the stock might just continue. So I think if the stock corrects another 8 to 10% from the current levels, I think it becomes a good opportunity for long-term investors.
Okay, and now you've also got Wipro gaining by nearly 1%. Is what we're seeing. Coal India, Ultratech and Hero Moto once again showing some bit of traction is what we're seeing. Two-wheelers, Mayuresh, have been an interesting space. Any thoughts on that?
So again, I think 3 or 4 major players that you're probably talking about. I think Eicher Motors is more a play on its two-wheeler segment, along with MHCV. You're talking about TVS Motors performing exceedingly well, and again I think the kind of management committee that we've got to increase the market share from 13.3 to 14.5. The scooters are doing pretty well. They've been well received into the market. The BMW tie-up, I think that has augured well for the stock. When you're talking about Hero and Bajaj Auto, Hero predominantly caters to the rural area. Around 40% of its top line comes in from the rural side. For Bajaj Auto, it's more to do with 50% coming in from exports and a majority coming from semi-urban urban areas. So I think it's the kind of theme that you're probably talking about with deficient monsoons, lower MSPs. You're probably seeing festive season sales probably not carrying on over the next few months, and unless there is a structural change probably happening in terms of rural discretionary demand and spending going up, I think the Hero Motor volumes might just start abating a little bit. In terms of Bajaj Auto, I think they've got every chance of actually pushing up their margins, maintaining that to the 21% mark. Clearly, the kind of market share, 21%, is also what the management is expecting. And the lower end of the range, I think the Platinas and the CT100s, the product mix will be very, very interesting for Bajaj Auto. So at this juncture, probably I think I'll wait for declines on Hero MotoCorp, but I'll still like Bajaj Auto with a 9 to a 12-month perspective.
Okay, so that's as far as the two-wheeler pack is concerned. So if that is what we're tracking right now, but Another mid-cap stocks that's actually got active is GMDC, and decent volume seen on opening as well. As far as this count is concerned, is what we're tracking. As far as GMDC is concerned, remember it's a mining and the metal major, state-owned, which is probably only a big factor out there is the cash levels on the books there, 5% higher, 6% now as far as GMDC is concerned. Mayuresh, coverage on this or haven't managed to look at it?
No, Priyank, I think no coverage on this. Very difficult to comment.
All right, fair. Now the other one that I actually want to get a comment from you is also a couple of these agro stocks. We were talking about UPL and Advanta, but the sugar pack again seems to be getting some bit of traction, and the rice producers seem to be getting active as well. Any coverage there? Have you been looking at probably that as a trade to watch out for in 2016 as well?
So clearly, I think, Priyank, if you talk about both the sugar and the rice space, they are commodity driven. That's point number one. So they're highly cyclical in nature and they work in cycles. So the sugar cycle works in a 2 to 3 year cycle. And clearly, if you look at the inventory that has probably come through from the last sugar season, that's close to 9 to 10 metric tons. If you add the existing expectations of production coming through even at a lower scale at around 25 and a half, and demand probably staying at that same level, you reduce the 4 MT of mandatory export that the government has earmarked, you're still carrying over an excess inventory this year. So the kind of rises that we've seen in sugar prices, at least on a domestic scale, around 27,500 rupees per ton, I think there is no meaningful upside. I think there might be upside to a fair bit, but again, I think will that meaningfully play out? I think the kind of stock price increases that we've seen largely factors in a huge amount of increase, which I probably do not see that happening. Again, I think the surplus in the overseas market, specifically related to Brazil, will still continue. So I think the sugar season probably will turn for the better in the coming year, in the coming sugar year. But clearly this year itself, I think we're probably seeing the better part of the sugar rally probably being done. Similarly for basmati stocks, you're probably seeing a small component being exported to Iran if the embargo probably there is lifted. But again, at the kind of pricing that basmati receives on an international scale is far lower. I think the April to August figures that I was observing, compared that to last year, I think the price fall has been quite substantial. So even though the volume uptick has been marginally higher, I think the fall in realizations is not going to have a positive impact on a lot of cash flow. So again, I think a little bit cautious on both these sectors, at least at this point of time.
Just having that buyback announcement coming in as well is what we'd say almost 10.06 lakh shares is what they're actually looking at as far as Just Dial is concerned. Mayuresh, this one's had a little bit of a knock in the last couple of weeks. What do you make of it?
So clearly, I think if you look at the performance for Just Dial over the past few quarters, again, clearly a little bit disappointing when it comes to both the top line growth, how the margins have panned out, and clearly the same gets percolated on the bottom line. If you look at the subscriber base, I think pretty huge, and they have been disruptive as an industry. So clearly, I think no peer comparisons or no competitors per se, but clearly I think the new app that probably comes through is going to be a redefining point in terms of the acceptability and the kind of earnings that they can actually generate out of that. If you look at the paid listings as an overall component, I think it's still very, very minuscule, and the premium listing still remain in that 20 to 23% kind of mark. So I think they need to shore this up, probably to have the premium advantage and the valuation premium that they probably derive. And again, I think the new app, I think that is the major key break or make point for Just Dial. So again, I think valuation is a little bit on the higher side. The success of the application will be a key driver for that stock. So one really needs to wait for how the numbers will pan out. But till that point of time, I think I'll stay away from the stock.
All right, so that's Just Dial out there. Stocks holding on so far is what we've been tracking. What about the cement pack, Mayuresh? Some of the cement majors getting active today. Ambuja, you've got ACC also in positive. Ultratech also trying to provide some bit of support to the index. Any thoughts on the cement sector?
So clearly, it's a process on how you perceive the industry will do. And again, I think it's a long call that you're probably taking in terms of utilization levels going up, with demand for cement, both from the housing and infrastructure, actually perking up over the next few quarters. Having said that, probably I think ACC's numbers were exceptionally good, and they beat our estimate both in terms of how realizations came through, and even on the bottom line, I think the EBITDA per ton surprises quite pleasantly. Having said that, I think Ultratech Cement as well, I think with the kind of expansions that they're probably doing, holds them in good stead. And clearly, I think if you're looking at the way the geographical presence is spread out, the realization uptick along with the volume uptick is going to be a huge driver for these stocks. A major component has been the power and the fuel cost actually going down. The freight costs having been very stable over the past few quarters also adds to the EBITDA margin. So Ultratech, ACC from the large caps is something that we like. JK Cement, JK Lakshmi Cement from the mid-cap universe is something that we continue to prefer.
Okay, so that's as far as the cement pack is concerned and what we're tracking there so far. Just want to get some of the other mid caps going for you as well that have been actually in focus today and where we're seeing some bit of volume as well. GMR Infra now gets added to one of the most active counters, 5% higher on that stock. Subex in the last couple of days has been seeing some bit of volume increase as well, 3% move on that counter. GVK Power now up 4.5%. So the entire mid-cap infra theme now somewhat getting active. Gammon India 15% is what we're seeing. IVRCL joining the party as well. Telecom stocks have been the other area which will probably come into focus for the next couple of days, Mayuresh, as we count down to the Jio launch as well. Is there a certain play in the telecom pack that you're looking at?
So clearly, I thought the telecom operators, I think there is still stickiness as far as their key data points are concerned. So when you're talking about the ARPMs, or you're talking about the MOUs, I think you're going to see a very sluggish kind of growth moving forward. And even the data revenues, they are going to see some amount of slackness going forward. Having said that, I think if you look at the RMS and the SMS data, a lot of these companies probably are not up to the mark when it comes to expectations. So clearly, I think it's more a relation of expectations panning out versus reality and the kind of spectrum payouts, the kind of capex and OPEX requirements that need to be carried out with a lot of these telecom majors, the kind of debt on their balance sheets. If you look at Idea's net debt to EBITDA, that has inched up over the past few quarters, while Bharti Airtel already has an over-leveraged balance sheet. So if I need to take a call, probably Bharti Infratel is something that I like from this space, and that too on declines. Clearly cash-rich balance sheet with the kind of imprint that you're probably seeing from 2G to 3G, and even on the data front, you're going to probably see expectations in terms of realizations per tower going up. The tenancy ratio quite has held up at around 2.16, and that is expected to perk up as well. So I think Bharti Infratel with a very sound balance sheet with good return ratios is something that will prefer on declines.
Well, United Spirits as well, the AGMs are going to take place today and get a mention as to how the counter is playing out ahead of that itself. As far as United Spirits is concerned, up by nearly 1%. Mayuresh, tracking these developments closely as far as United Spirits is concerned?
Again, I think we don't track this counter playing, so very difficult to comment.
All right. Mayuresh, if one was to probably look at the broader markets right now and the way the markets are shaping up, have you already chalked out a list of your top bets for 2016? Is there something that you've been recommending clients to look at from a 12-month horizon?
Oh yes, clearly. And out of all the other stocks that we probably discussed, I think within the auto space, Amara Raja Batteries is something that we will continue to prefer. Yes, it trades at a premium to Exide, but I think that premiumization over Exide should continue. Very strong earnings momentum, 18% is what we expect. They've done a timely capex. Yes, I think the sluggishness from the industrial segment might continue, but overall on a consolidated basis, our take is that Amara Raja should outperform. Similarly, I think within the auto space, I think Ashok Leyland is something where we believe that the outperformance should largely continue. And again, I think if you're talking about the mid-cap universe, MT Educare within the education space is something where our belief is the earnings growth should continue. Surya Roshni from the consumer durable space, where our belief is that the LED segment should contribute meaningfully to its top line going forward. And though the steel business might just have a dampening effect, clearly I think the LED business over the next few years and the other businesses like they're foraying into fans will clearly hold them in good stead. So I think a few other stock ideas from a bottom-up approach is what we're probably liking at this point of time.
All right, Mahesh, always a pleasure talking to you. Thanks so much for your time today and sharing your views on the market and some top picks for 2016 as well. All right, quick reminder though, tune into our exclusive panel on the sidelines of the Invest in India Singapore Summit. You can catch Vishal Kumar of Xander, Sanjay Guglani of Silverdale Capital, Dana Gupta of Manulife Asset Management, Sanjay Mathur of RPS, and Yang Yen Thaw of yangworld.com at 10:30 a.m. today. Up next, joining us on Market Guru is Vikas Khemani of Edelweiss Financial Services. Stay tuned.